Welcome to the Tradier Rundown. I'm still thinking about what Luis said. Bobby, do you have a shirt that has your surname on it?
Shirt with your surname on it?
I do.
Yes, I did.
Yes, I do.
It's not the only one.
Welcome to the Tradier Rundown. I am Jim Uriel. That's Bob Iacino. Together, we are the hosts of Tradier's The Trader's Edge, which comes out live at 3 o'clock Central Time on Wednesdays. Please join us. We have a great time. Robert, how are you?
Good. How are you doing, buddy?
Good. We're going to talk about volatility and the different hurdles that we are headed towards that could have a lot of effect on all markets. So on August 5th, when we had that big drawdown, the VIX, in the stocks, the VIX shot up. I mean, some say it traded as high as 80. I think that 50 to 60 is more believable. It seemed like there were some weird ideas with the prints that happened that day. Yeah. Do you think of it as the fear index? Do you think of it as the respect index, meaning are people respecting risk enough?
I think fear is the wrong word for it. I mean, I know that's what we always said, and I don't know that we said it, but that's what was always said. It sort of bugs me the same as sort of Dr. Copper bugs me, it's like these market cliches. I just look at it as insurance. When people are buying insurance, like if I drove my car from my driveway to my neighbor's driveway down the street, and my insurance had lapsed, I wouldn't worry that much. Right. But if I drove my car from here to the other side of the state of Florida without insurance, I'd be very stressed out the whole time. And I always think of it like that. And I mean, I guess that translates into fear, but I've just never thought that that was the right way of saying it, because if you were fearful, you'd be flat.
Yep. Okay. Here's what I think. And you tell me if you like this or not. Yep. When I see an extended period of time of the VIX trading above average, like let's call it between 18 and 25, to me, that's a period of time where people are respecting risk, making it slightly less likely that we're going to have these monstrous downturns where we're down, 12% in 3 days. Do you think that makes sense?
I do. And I think that's also part of the reason you've talked about, I believe it was the person who went to Notre Dame, who we shun that name here, Jeff Kilberg, who talked about, buying the VIX or buying stocks at a certain level of the VIX, selling stocks at a certain level of VIX.
Yeah.
If the VIX rallies and people are putting insurance on or covering positions, it's almost more likely that it mean reverts.
Yeah.
Right.
Oh, there's no question. If it's a panic and everyone's pumping in and buying puts because, I should have bought puts a week ago. And by the way, when Jeff Kilberg was playing offensive line for Notre Dame, I think there must have been one play where somebody knocked some sense in his head. And he said that one brilliant thing. And he said, anytime the VIX is over 50, I buy stocks. And I was like, so that really works. I mean, you might take some downside initially, the big one, but for the most part, it is not too long before you make money. My next question to you is this. We're talking about volatility. We're talking about the election. We're talking about the fact that polls are switching every day, and it definitely seems like there's big headlines to drop that both sides do in response to declining poll numbers. These can all be market moving. What other assets would you look at that you'd be concerned with volatile big moves other than equities?
So I'm going to flip that. I'm going to say that I would like to buy the VIX after the election. I learned something this morning from Mike Singleton from Invictus Research. Been on our show a couple of times. If you guys aren't watching the show, you should. And he said this morning in his Daily Edge that literally 100% of the time since 1998, the VIX has been up post-election, 100% of the time. Now, other indices, the NASDAQ, the S&P, both had also very good performances, somewhere in the range of 70 to 80%. But by the same token, September is a bad month during elections. And it's a bad month in general, but it's a worse month when there's elections because of the reason you just said, uncertainty and all the volatility that comes with it. But afterwards, it's generally been a buy, and the Russell has been a buy 100% of the time.
Good. And tell me this, does gold come into play in this particular election?
I love gold. I do. I just like gold long term, so it's very difficult for me to say. Gold's probably going to suffer. Probably going to rally a little bit during the election as equities sell off, and it might sell off a little bit as we get past into that point of November, December, when the election is over. But then after that, man, to me, the equities are going to underperform simply because of the shift we've seen in deficits.
I want to close this out, but without any of your political leanings, what does Bob Iacino, the analyst, think is the outcome of the election? Can I ask that question, or can I get canceled for that?
No, I think, unfortunately, I don't know what the outcome of the election is going to be. I really don't, but I do think Congress will shift right.
Okay.
think that because I'm not going to say why. But that's
okay. Anyway, this
because
is
Trump's not running for Congress. That's
yes,
what I was
this is Tradier's rundown. I am Jim Muriel. That's Bob Iacchino. And in case you forget that it's Bob Iacchino, he has his last name on his shirt. Please join us for Tradier's The Trader's Edge, 3 p.m. live Wednesdays. Thank you, guys.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.